Welcome everybody. We're glad that you're able to make it today. Today we have an exciting um, topic that we're going to discuss. It is in the financial industry and it deals with building generational wealth through long-term investment strategies. And this is always important for us since we have families, we have generations that have been before us and those that are coming up. So if we haven't been lucky to where we are not able to get the wealth from the older generation before us, we need to look out for the younger generation. And that is our topic for today, building generational wealth through long-term investment strategies. In the US, which is our home, from another home, we see many of the bigger families that have created wealth. This has been intentional. And we also want to be intentional as we share these strategies and be able to discuss some of that information. About the speakers, my name is Roy Kaizi. Um, I am a financial professional, over 20 years in the financial industry. My background is an MBA, Finance and Taxation, and I'm lucky and happy to be here to share some of that wealth of information. Um, Previously in the banking industry, risk analysis, controlling of investment modules, and also in the mutual funds area, Series 663, which gave us and gave me the opportunity to be able to look at different investment objectives. And that is my passion. With me here, I do have Edward. Go ahead and talk to us about yourself.
Yeah, I'm Roy's son, Edward Kaizi, and I have the privilege of being able to speak to you guys about wealth building and uh, long-term mindsets. But a bit about myself, I'm a rising senior, computer science and finance double major at SMU, and I've had some practical experience in the industry through various internships, namely one of those this past summer in New York at JP Morgan. So been able to apply some of those skills in today's presentation, and I'm excited to be able to share with you guys. Thank you.
Thank you, Edward, for that information and for sharing the platform with us today. With me, your old man. So take it right along so that we can go ahead and dive into.
Yes, of course. And so, as I talked about earlier, today we're going to be looking at what building generational wealth looks like and different strategies for long-term financial security, whether those are vehicles or things of that nature. And I'm sure you all know that building generational wealth is more than just amassing assets. It's about establishing a lasting legacy. And we want to do that by legacy planning, which looks like establishing a strategy to grow, to preserve, and to eventually transfer those wealth across generations. As talked about earlier, my dad Roy has a lot of experience, decades of that in long-term investment solutions. And the goal of this presentation is to provide you guys with a holistic wealth approach where we combine financial planning, tax strategy, and real estate, along with education to build a secure future. And so, next slide, please. And so, yes, you guys might be asking, what is the importance of long-term planning and laying that foundation and generational wealth? Well, long-term planning is essential for turning current success into a lasting legacy. And so I'm sure you guys know what the definition of generational wealth is, but it's essentially being able to pass wealth from one generation to the next, which can include assets like real estate, investments, and or businesses. And so in our case, we look at that with using a comprehensive strategy, which involves estate planning, as mentioned earlier, tax strategy, risk management, and eventually investing to ensure sustained wealth. And so we also want to have a future-oriented mindset where we address present financial statuses and consider future implications of that while preparing for the future and the needs and growth of that. And so before we can do any of that, we have to first start with, next slide, please. start with a solid foundation. Every journey towards generational wealth starts with a strong financial base before you can look at growing your assets. And so you have to consider your debt management, your savings, and having an emergency fund to essentially have a fortress to be able to then build on top of. You have to have a strong foundation to then be able to pass that when our time comes. And so some of those things look like eliminating high interest debt initially, which helps us to reduce liabilities to free up capital for investments. Those are emergency funds to help us maintain reserves. And then having, when we get our paychecks, automatically going into savings to build consistent wealth through regular automated contributions to our accounts and to our portfolios. In this case, it's happening in the background, and as we continue to walk and live, wealth is being built, and we can go into vehicles of how we can then look at distributing that and accruing that. And so we have investments into commercial real estate. We can look at building wealth through property ownership as one example, one vehicle. This provides us with passive income streams, whether those are rentals or income from commercial properties. Also with real estate, luckily, unlike vehicles, real estate appreciates in value. So as your dollar depreciates because of inflation year after year, if you own properties or real estate, these assets will appreciate, which will help you to counteract these effects of inflation. And at the end of the day, just have appreciating assets that you can then utilize in the future. It'll also help you to diversify your investments. They can spread them between different regions or property types, which can help you to build and continue to grow your foundation and growing your wealth. And so, next slide, please. So we have our long-term investment strategies. There's three big ones here that I'm sure you guys have heard about, but it's good to reiterate. You look at compounding your wealth through strategic portfolio management. And so these can look like diversifying your portfolios. And when you do this, you're essentially reducing the risk of impact of volatility, and you're allowing your family to benefit from various asset classes. So these can look like stocks, bonds, even commodities, but different markets to be able to balance and balance your risk and have multiple versions of returns. Another great way in being able to compound your wealth is through index funds and ETFs. That's one thing that I focused on throughout my summers at JP Morgan, especially with ETF fashion. ETFs are exchange traded funds, and these are great because they're low cost and they allow you to have exposure to the broad market. And actually, ETFs they're rebalanced very often with the top performing companies in the US, if you're looking at the S&P, for example. And so in that case, you can hold or buy one stock per se, like an ETF, like the S&P. And at that point, they're actively managed. And so everything's happening in the background to give you guys the best exposure to those stocks or to the market to help you guys to be able to continue to grow that wealth. And with these companies in the S&P, they all give dividends. And so if you automatically have your dividends being reinvested, those can continue to compound and accelerate your portfolio growth. And so these are some of the vehicles that you can use to generate and to preserve your wealth. But Roy will be getting into some more different fashions and vehicles to preserve your wealth and to grow that, beginning with IULs. And so please take it on, Roy.
Thank you so much for that great job of divulging into some of the various products, various strategies in which we can invest. Well, you will also have to tell us a little bit about those ETFs and what they stand for as we get into the question and answer process. But moving right along, one of the major wealth building tool that we have is what's called the IUL, which is the Index Universal Life. This is life insurance that is on steroids. It comes as a combo of life insurance with the investment options. So everything that Edward has talked about the various stock market tools that are used are input into the IUL, but the difference is the protected growth strategy that is used to index the profits, to index the ups and downs, which leverage the market indices so as to provide potential growth while protecting against market downturns. Zero is a loss floor advantage that we get from the IUL, and your returns are never below zero. Even if the market crashes, there is always that buffer that is put in the indexing, and that's why it's called the indexing, which safeguards the policyholders' accumulated value. That is unlike what you will find in 401k stock markets going up and down. And this is the reason we're here, to give the information on these strategies for wealth building. Upside protection without direct investment. IULs track the index performance without investing directly, which allows growth while eliminating exposure to market losses. That is also one of the major advantages that we find in this as a tool for investment. Building wealth, continuing with the Index Universal Life, it has the power of indexing, as I already alluded to it, the annual reset and the lock-in gains. Indexing, explained, is based on credit interest, based on the performance of major indices. You will find the S&P 500. You will find the Morgan Stanley products. You'll find the BlackRock products in there, which are all indexed in the IUL. The annual reset benefit: every year your gains are locked in, and the index benchmark resets, giving you a fresh opportunity to grow. That is not something that you may see if you decide to go into the stock market directly. That's why we have the lock-in strategy. Once credited, the gains cannot be lost due to future downturns, which is creating a ratcheting effect that builds wealth consistently. Now, in my experience with my clientele, in the years of experience, this is something that I do attest to. You do get those indices locked in, and the percentages of what the gains is something that is also realized in the IUL, as opposed to going into the stock market directly. Not to say going into the stock market is bad, but if we're looking for wealth building and also protection, then this is a tool that I do recommend. There's a tax efficiency. Being a tax professional, the tax deferred accounts that come with the IRAs and the 401ks to grow investments without immediate tax liabilities are some of the advantages that we have to take advantage of to maximize returns by minimizing the tax impact. Because when the taxman comes in, they really erode all that you have or we have fought for. The tax-free growth is also attained in the IUL as one of the leveraging for the Roth IRAs, and that is also the withdrawals in their retirement. Capital gains planning is also one of the avenues in which we hold assets long-term to benefit from lower capital gains taxes. When we open up an Index Universal Life policy, we have allocations into various areas, and that is based on the investment profile of the clients that we are dealing with. It gives us a feel by asking questions about how risk averse they can be. And in that way, we have various allocations based on on how they feel about the investment world. Estate planning is one of uh, a crucial area for securing and transferring wealth effectively. Wills and trusts are a legal instrument that help in the distribution and protect family wealth. If you don't have a will, then you're opening yourself up to where you let the government, through probate, take care of distribution of assets, even to some people that you may not like. So it is always good that you have these set up ahead of time. Beneficiary designations is also very important to ensure all accounts and policies reflect current wishes and family. Many times we set up, a will and or choose beneficiaries and put it away in a locked safe where it may be forgotten. So it is always important on an annual basis that you are reviewing your will and your trust, as well as those beneficiaries. In this area, we also have the gifting and the life insurance. Life insurance is also dear to my heart, having been in the industry and seeing clientele go through challenges in their financial as well as in life, where a major money maker leaves and they don't have anything set up to manage the estate taxes and liquidity. As much as this may apply to the richer parties, but this is also something that comes up so often, even in the, our day-to-day lives. Annuities. Annuities is another of the wealth planning options that we have. This is a very, very important tool, especially for people who are leaving their employment. They're moving their 401ks and looking for that protection from all the these instabilities of the stock market. We are in a position to recommend various annuities that we have. It could be a guaranteed income annuities to provide fixed or variable payouts, offering financial predictability. Tax deferred growth is also an element for the earnings that grow in the annuity without immediate taxation, compounding value over time. Building legacy, certain annuities, if not all, include the death benefits, transferring value to the heirs, which means that the monies that have been transferred are not taxable, as opposed to if you're transferring earnings from a 401k to somebody else, those will be taxed at whatever taxation rate that there is. And that is the growth of the money that we are looking for, and we are here to explain and also to share ideas about. So why are we here? As much as we may have the expert guidance, we are also here to be able to hear from our clients. They don't have to be regular families, they can be businesses too. A business owner, if you want a succession plan, it is important that you have life insurance on the business if you leave. If you have business partners, we are able also to give you that opportunity of modeling a specific life insurance for the business and also for the partnership to take over. Comprehensive planning. We do assist or help and give you advice on the directions to estate, tax and investment planning options. As much as some of these you may need a lawyer, but at least the education starts from here. We have teams that we work together with, and we also support to give insight to the tailored investment solutions. As you heard from Edward, he has had some good insights through his JP Morgan training into many investment solutions, and those are things that we want to be able to discuss and bring to you. Let's build the generational wealth through strategic planning. What's the advantage? The advantage is everyone has a personalized investment strategy backed by a strong track record that we can work with you to see that we achieve. Through a financial needs profile analysis, we do come up with information, and also you share your information, and we show how we have the history has been consistent when we value create for you as an investor, as a clientele. Do take the next step. Connect with us to secure your financial legacy through investment solutions. Talk to our people about the ETFs and break it down possibly.
Yeah, sure. Thank you for the synthesis with all the different vehicles and options in terms of preserving, accruing, and passing on wealth. With how an ETF works, you can access this through any brokerage as a retail trader, like all of us here. And essentially, it allows you to buy just a single stock. At that point, you get exposure to a broad index. And so ETFs, they track indexes. So at that point, it allows you to gain exposure. So for example, an index that is very popular in the US is the S&P 500. It gives you the opportunity to gain exposure to the top 500 companies. And the good thing about this is that it's actively managed. And so at that point, rebalances happen in the index where if there's a company that's not performing very well, that can be taken out and replaced with a company that's performing. And so in our case, that'll help us to not have to actively be looking at the market, but to be able to allow our money to sit as it goes from generation to generation, knowing that it's being tracked by the top companies in the US. And so that's a bit about how a ETF works. But any questions are welcome. And I appreciate your guys' time on this Thursday.
Thank you for that explanation, and we would want to see if there's any feedback that in the chat. We have a thank you, and highlighting how the long-term strategies like the IOLs and annuities can create long stability to protect our loved ones and open doors for future growth. Let's be intentional. That's from Miss Immaculate. Thank you. The mic is open. Let us go ahead to get any other feedback. We're here to learn. We're here to share some of the good things that you may have. And as we go ahead to implement some of your suggestions too.
What advice would you give to people who are entering into such strategic planning later, especially with the mindset? I'm speaking as an immigrant into this country with a mindset where the background of saving wasn't so emphasized in our growing up. And when we come here, we've gotten jobs, and we have invested in some retirement funds and some life insurance. But there are other people who don't have the capability to have jobs that can give them such infrastructure. So what kind of advice would you give to late entrants or people who are interested in beginning to say?
Okay, very, very good question. And I could take on part of that, Ms. Aggie. The first and foremost, if you do have a job, your employer does offer that 401k, take it. You take it, and additionally, if they are matching, take that money. It's free money for you, in that they are able to give you money pre-tax to invest into your retirement. So that would be one of the areas. Being a late entrant, if for any reason you don't have what it takes in terms of a 401k, then the IUL would be another option that you would look at. The IUL, which has both the components of the insurance as well as the savings for retirement, and it is also very, very good tool for college education for those who have families. You're saving at a very low rate while the child is still young. For the premium, you're hitting two birds with one stone, the insurance, as well as getting them a nest egg within the policy, while using the protection, the downward protection, away from all the ups and downs in the market. Yeah. If an IRA is something that is available to you in the individual retirement account, it is also a good tool for you to take advantage of. And obviously, since we are immigrants, many people say they want to be able to be repatriated, or if somebody that's a loved one, you do want to have the life insurance. There's also the term life insurance, which is an option, though it does not give you that capability to have the accumulation that the IUL comes with. Hopefully I did point and answered your question, Ms. Aggie.
Yes, thank you.
Okay. Good question and feedback. All right, I see Ms. Immaculate, you do have your hand up.
Oh, thank you. Thank you both again. You did an amazing job here. Just maybe to add on what Ms. Aggie was asking, we do a good job in really investing. Let's say people who are investing, who has like 401ks, RIAs, those ones who are saving for themselves, or even investing in the stock market. But what we have to remember though, the part where Mr. Roy and even Edward touched on, we have to remember the part of protection. We can, yes, save so well, we can put money on the side, but we have to remember the rain days. If I'm working, I'm saving money on my 401k. If I get sick tomorrow, I cannot actually touch that money and use it. If I do, I'm going to be heavily penalized by the IRS by taking the money way before maybe age 59 and a half. But with these kinds of other products, our great speakers talked about, like index universal life insurance, it does heavily come with two sections whereby you have protection and then you have investment, meaning that you have access. It's the liquidity is really good. That's the big part of IUL, whereby if you have your cash accumulation in there, you can access that cash. Even when you lose a job, you don't even have to be sick. You lose a job, you have your cash. You have actually a bank, your own bank, whereby you can actually borrow money from and use it however you want. And something else, another major part of those kind of other products like IUL, is the living benefit. The living benefits, you get sick, you can access the money again. You don't even have to die. That is why they call these the life insurance you don't have to die to use. So you actually kill so many birds. You get sick, you access the money. You die, your family accesses the money. You live a long life. That is the generational wealth our great speakers talked about. Well, you leave money to your family. So all along, like everywhere, today you save, tomorrow you save, and your future is safe. Thank you so much again, great speakers. You did an amazing job.
Thank you, Ms. Immaculate, for pointing that out again. And just to elaborate, the living benefit is a component that comes with the Index Universal Life. If a doctor, for any reason, does diagnose you with a life-ending illness, you do have access to 100% of your coverage. Let's say you have a policy of 500,000, you do have that accessible to you to help you fight that if it is a cancer or anything. And we have cases cases that people have survived after getting this money. They don't ask it back from you. They have been able to have the access to fight for their health, because health, as you know, is one of the major bankruptcy causing a situation when you do have a major health issue that comes up, because it is pretty expensive. And for any of the other temporary illness, as long as it is chronic, critical, or terminal, you do have access to this Index Universal Life too, but for the living benefits as one of the other options that we look at. Okay, those are some good areas of discussion. We can take a reaction, 1 or 2 questions, and hopefully we have been able to be a good resource for now. So another question that usually comes up as you will think about what could be, as much as we are looking at the Index Universal Life as one of the areas that we would like to see you take advantage of. It comes cheap, as little as $50 a month. You do get a policy, though if you want to have that acceleration in the savings, you do want to take a bigger policy. It does also depend on health. Health questions are asked, so that you have the advantage of getting the life insurance alongside with the savings that come with it. Then in the way of annuities is a contract. It's a contract that you get when you transfer funds from your 401k, so that you can control that loss, which is through indexing. Minimum is at least $10,000 to get that started. So if you go win that lottery, or you go to gamble and you get that $10,000, this is one of the best ways in which to protect the principal as well as avoid any future losses, especially if you are on the risk-averse area side of investment. That's a major tool that we also do have.
What's the tax rate? Say, for example, if something happens to me, no, it won't, and I need to cash out, say a life insurance plan. What's the tax rate? How much is it taxed at before my beneficiaries are able to benefit from?
Okay. Well,
Like, say, for example, I have $500,000.
I can take that on, or if there's anyone who wants to take that on within the team. But to answer your question, if you're not here tomorrow, you have a $500 policy, your beneficiaries will not be taxed at all. They get the $500 in that policy tax-free. If you get a loan, there's a 6% tax. Get a loan out of your IUL, there's a 6% that is payable to you, depending on how much you take out. But that is also something that that is an added advantage when we talk about the Index Universal Life. And I hope that I did answer your question on that, Miss Aggie. Did I? That was a question to Ms. Aggie, if I answered your question on the tax rate. Okay, so it's a tax-free.
Yes. I'm sorry. I was trying to find my unmute button. Yes, you did.
Okay. Awesome. So we do have a few more minutes in which we can share some more feedback. And
oh, sorry, can I ask? Sorry, I was driving and I couldn't unmute. Can I ask something?
Sure, Miss Lily.
You just talked about the 10,000 part of 401k and also being annuity. So my question is, you said it's part of the protection. Part of the protection of the plan or the policy that you already have or the benefits that you already have, or it is, or you can claim the 10,000 back, or your beneficiaries can claim it. So I didn't catch it quite well.
Okay. If you are talking about the annuity, and I want to be sure that that's what you're talking about, Miss Lily.
Yes, please.
Okay. Yes, to start an annuity, which is also indexed from all the stock market ups and downs, it is a $10,000 and above investment that you roll over from your 401k. You can invest into it if you have won that from gambling or any other resources. It doesn't matter, but that's the minimum that is accepted into the annuity. It is your money, and in that way we go ahead and choose among a variety of stock options, market options that are indexed to the stock market, to see that we are working with you on how risk averse you are, your investment profile. And then we also show you the growth of that 10,000 over time, which has averaged 10%, which you can't get in the CDs and the investments in your savings account from the bank. So hopefully that is, and yes, on death, if there's a situation on death, your beneficiaries to get that. Usually, about 2 or 3 years after you've put in, then you can start withdrawing. It can be withdrawn through annuities, which is annuitizing. It can be drawn in portions or the whole part of it, but you want to keep it in there for the growth of it.
I get it. Thank you.
Okay.
I get it now. Thank you. Yeah.
All right. So what we have talked about today has been a variety of information. And the information that we discussed started from everything else that leads you to wealth generation. You start with planning. You start with a strategy to get out of debt by paying off your higher interest credit cards. We can do that financial plan that identifies those areas and see that we are driving towards you getting monies for investment as well as for the insurance, because the investment house is protected by the insurance, which is the cost of you maintaining your house. If you're still young and growing, you have a young family, you want to see that they get through college education, you want to be there so that you're meeting their goals. We want you to have that insurance plan in place if you don't already have it. And is it the right one? Some people do have $1 million accidental death policy, but that becomes something that you get out of only if you die as a direct result of that accident. And these are situations where we have been able to help our clientele to see that they have the right kind of insurance. Then along the way, the Index Universal Life is also used as a tool for for college education. Get those kids started with investment. There are other options. There's the 529 option where you can invest. It's usually state level. If your kid goes out of state, then that may not be applicable. They may not have the opportunity to use it, which is unlike the Index Universal Life. You can get it from one child to another. If a specific child decides they don't want to go to college, you can use it for something else. You can invest it into their life insurance and their savings, start a new home for them. There are many options, and we're here as a resource. Whoever invited you, get back with them, let them get you some more of the information that we have discussed. And if need be, we can also put our information in the chat so that you see how you can get back to us for more ideas, more information, more feedback on this. And we work as a team. Not just me and Edward. There's many other people who are on this call too. And we would like always to hear from you. It gives me such honor to see that you're able to work with your son, which is he's still in college. He's still pursuing his engineering as well as the finance, but he has seen this, and our young blood needs to see how to get along and jump on this path of savings, financial literacy. Urge them on, urge any that you may have at home to join us. Eddie, do you have any closing, Edward, remarks? If nobody else has something to say.
No, I just wanted to thank you guys for the time that you guys spent on Thursday to learn more about different vehicles and wealth generation that are offered in the market. And yeah, it's a privilege to be on.
That was short. We were still waiting to hear from you as we wrapped it up. But going once, anybody else has something, a remark, information, please do reach out if you have any other questions. We also do have a link where you can view our past our past. Immaculate, if you have a minute, you can put that on. And going forward, we are also opening up many more avenues. We work as consultants in this area. You can start off part-time with us. We work with the Fidelity and Guarantee through the Freedom Equity Group. It has quite a bit of other companies that we work and represent. Core Bridge is one of our companies that we work for and work with. And it is a great resource to be able to access all this market information in BlackRock, the S&Ps, JP Morgan, all indices that we have, and we would be looking forward to working with you and also getting you more information now and in the future. Thank you. Thank you so much for taking your time today, for being with us. You could be elsewhere. And as a resource, if there's anything else, we would like to be here for you. And then I guess for the young adults, incentive for them to save. That's a good one. As a savings vehicle, a young adult, Edward, what would you say as an incentive to your young adults? What could be an incentive that you experience?
Yeah. I think as we talked about in the presentation, it's having a forward-looking mindset. Understanding that right now you're reaping and you're planting seeds that will hopefully be able to sprout and be able to provide fruits in the future, whether for future self or a future spouse or future family. But at the end of the day, investments accrue in value, and you can invest or save different vehicles we talked about, high yield savings account, but just the aspect that if you put stuff away right now, you'll be able to reap benefits and live with more security and comfort in the future. But please feel free to elaborate on that, Roy.
Okay. Yeah, hope that did put some light on your question, Ms. Irene. And obviously,
Yes, thank you. I just wanted like something to start them off, just to add on to everything else that you presented. Like to encourage them. I like the part of them putting something away from their checks. I think it was on Eddie's slide. But yeah, things like these are really helpful. So thank you both. Great presentation.
okay. Mr. Edward may not have told you that he opened up an investment trading club at SMU for his peers, and he's leading on that. So he also has some good nuggets in that area of investment. So as you put that trading into play, Edward, how do you generate the savings through that aspect as the lead of our investment trading club? Sorry to put you on the spot.
Not necessarily. I think that the question has multiple parts to it, but when you're looking at generating savings through the investment club, most times you're looking at picking different securities that you see based on the market conditions might perform well. And so you might look at more particularly securities like, for example, tech that will give you dividends so that they essentially pay you to own the stock. And so, for example, stocks like Apple or Microsoft, they pay very hefty dividends, which essentially are paid normally quarterly, which just compensates you for holding the stock. And that's totally by the company's discretion. And that can act as a slow but a savings vehicle within investments of that nature. Otherwise, in terms of savings, it's purely just returns that come from the market, and being either knowledgeable or strategic and how you position your assets. So,
Okay, a good resource to go to talk to. And as you get into that JP Morgan space, for more insight in the derivatives, parents, if you do have any of your younger people, let them talk to Edward here, to get a little bit of inclination to savings, derivatives, and which all turns back to the safety which the IUL and many of our other products, like the annuities, to provide, so that if in terms of any market fluctuations, we would like to see that we're looking at those various stocks, called options that we have available to help protect the principal. Again, thank you all for taking the time, 9:10, and we are always ever grateful. We do hold these every Thursday evening. We do have sessions that are free, so that there could be different topics, and in that way, you're expanding on your financial knowledge, as well as also, if eventually this is a platform that you would want to share with us, it is there is a good benefit of having generational clients. Some of the clients I've talked to 20 years ago refer their people, and it is always a good space to be. Good night. Any closing remarks? If none, you all have a good night, and thank you for taking the time out. Thank you all.